Oh, I think we are.
Hey, we're live.
Cool. Okay, this is our first Facebook Live.
Yes.
I'm Robin Sheridan with Real Logic Sotheby's.
I am Kyle Berquist with Primary Residential Mortgage.
Fantastic. So we thought we would do Facebook Live to answer people's real estate questions and financing questions.
Yes. Yes.
Because we thought it would be fun and we like to hang out.
There's
a changing market.
There's always so much news that comes out all the time that it just we want to present ourselves and be here in a way that we can help clear the air and answer any questions that may have come up over the past week or two. If you're thinking about potentially buying a house or getting pre-approved to buy a house, what are your options? What's the market look like? We do this every day, and so we wanted to be here to be available for you guys.
Exactly.
Yeah.
And because we're just starting out doing this, we are new to this setup. So it may be a little wonky at first. I can't quite see who's joined our group, which I normally can. So we'll be figuring this out as we go. I'm going to do a little, just drop down here to see. Okay. I'm not quite sure. Well, let's just keep going.
All right,
yeah.
So let's get started. Seattle Times put out an article this past week, said that we were the fastest declining market in the nation.
That's right.
That was cool.
Yeah.
That was good to see.
Well, what do we call that? We call it clickbait, right?
I think it was maybe a little clickbaitish.
Yeah.
Yes.
Yeah. It's not exactly true, is it?
Yeah. Well, I guess it depends. I mean, it can be true. You pick your data points, right? And we have a chart up in the back. If you look, you can see at the top of the chart, when was that? About April, just before April, compared to now, we went from about an $850,000 median house price in Seattle to about $735,000. So if your data points are from April of 2018 to now, November 30th of 2018, it looks like we're the fastest declining market in the nation. Mm-hmm. But it's because we took so many steps forward. If you go back to October of 2017 versus November 30th of 2018, we've appreciated 8% year over year, which is still more than the long-term average of 6% or 7%, and faster than the nation is appreciating year over year.
Exactly.
So, are we the fastest declining market, or are we just taking 2 steps back after taking 3 steps forward?
And appreciating more slowly than we have in the past.
Exactly. Yeah. Just because we're not appreciating at 25% steady appreciation every year, it's maybe a more healthy appreciation for the entire market.
Sure. I can say too, as an agent who's out there in the trenches, that it makes me sleep better at night because the spring that we had this year, it was unsustainable. It was crazy, and it wasn't fun to be a buyer, and even being a seller was pretty stressful in that particular market. So seeing the stabilization, actually, I think, is a welcome change, at least in my world.
Yeah, for sure. The headlines used to be, Green Lake House goes for $250,000 over asking, 30 offers, waived financing, waived inspection, waived. What else can you waive? Waived appraisal,
Yes, waived appraisal.
Which is just not, it was a crazy competitive market, but that's not sustainable, nor is it really a great idea. You don't want to be in the position where you have to waive all of your safety. Those contingencies are there to be safety nets for buyers, and you don't want to be representing and encouraging buyers to, hey, waive all your safety nets if you want this house.
Those are hard conversations to have. I never liked having those conversations.
Yeah. Because the downside risk is, this is the biggest investment that most people ever make, right? Like the loans that we do, it's most zeros that they're ever going to deal with, for sure.
Yeah.
You don't want to be the expert putting them in a position for potential financial ruin or catastrophe.
No, I don't like doing that.
No, it's awkward for me.
We can see people are joining.
Hey, look at that.
Hey, John.
John's here.
Do you want to ask a question? So if you ask questions, we can see them come up on the screen, and we're doing this on a laptop so that we can actually see those questions come up when they do. But in the meantime, we'll just chat. And we do look a little jaundiced right now. We're not usually this yellow.
Well, this is our first time, so live and learn. We'll
Live
go
and
get some white lights, some
Yeah.
white LED lights to put behind the camera,
Yeah.
and maybe it'll make us
We'll
look
go to like a tanning salon.
better.
In the meantime.
Well, then we'd be really yellow.
I guess that's true. It probably would be.
Yeah.
Well, Kyle put together some fun statistics about our current market and really what the prices have been doing over the past year.
This is the chart behind us is a 3-year chart.
It's a 3-year. Okay.
And I don't know if you can see it super well on your screen, but every year, roughly, we take about 3 steps forward and 2 steps back. And so we're at this point right now where we're about done taking our 2 steps back, at least if prior year's trends hold true.
Mm-hmm.
And a lot of that is because, well, every purchase prices are always a function of supply and demand, right? And so demand is relatively constant. This year, we kind of had a funny market because demand held back a lot earlier in the year, which then caused things to sort of snowball, exacerbating the decline in median prices. Reason for that, I have my philosophies, or I have my theories. Do you have yours?
In terms of why the market.
Why the buyers sort of held back a little bit this year, because the
Well,
market
there's a
wasn't
lot.
flooded with supply. The supply was actually pretty constant year over year,
It's true.
but there were much fewer buyers.
Yeah, there was a lot of people that were on the sidelines. I definitely had that in my business, and I think there was a lot of big news events that I think really kind of caused some pause for people. Also, the inventory increased, and that's always a little bit of cause for pause for people. So, I mean, HQ2 was a big announcement. There was the midterm elections. There was a rise in interest rates. So there was a number of things that really kind of got people to sort of pause and think about, their next steps.
Yeah, if I put myself in a buyer's shoes and I'm looking at the landscape of buying a house, and I say, okay, well, interest rates are as high as they've been in 8 years. Amazon, back in the spring, is sort of when it all kind of happened, and at the time, Amazon had stopped construction on a few of their buildings because of the head tax,
yes.
which is scary, right? Oh, you don't want to be buying a house when Amazon is, potentially 1 foot out the door, because not only did they stop construction, but they're also talking about HQ2, and there's a lot of wonderment about that.
Right.
And then rents stopped increasing because we had, over the last 2 years, just a record number of new apartments being built.
Apartments. I'm sure you've got one on your block. Everyone does right now. There's like a new apartment building going up.
Yeah, so you have a declining house price, maybe unstable economics for Seattle, and anyway, and rising interest rates. So
and new tax law.
New tax laws, yes.
Mm-hmm.
But over the past month or so, a lot of that dust has sort of settled, yeah?
Yeah, I think so.
Yeah.
It'll be interesting to see how it shakes out, like come January, where things get a little more robust again, usually in the market. So, yeah. And I don't think really right now, when the market started to stabilize, like maybe late spring, early summer, I don't think we have enough data really to show how the market is shifting,
right.
if it is shifting in the manner that people are saying in the Seattle Times.
Yeah, we don't know where it's going to go. I think come February or March, we'll have a pretty good idea based on where the data is at that point to say, yeah, it looks like it's going to be a softer market, because things could reset year over year. Yeah. And then I have another slide here that I'll pull up real quick. Inventory. So if you can see inventory, we've had more inventory this year than we've had in 5 or 6 years or so in Seattle. With that said, there's only 1,100 homes for sale. There's 129,000 houses in Seattle.
Yeah.
Months of inventory is what, 2.3, something like that?
Something like that. And I can't say it's all really fabulous inventory either. It's actually sort of
the houses you wouldn't want to buy those houses.
I can't say it's quality inventory. I mean, we have a lot of houses on the market, but there's a reason why those people were on the sidelines so long and waiting to put their houses on the market. Not all of them are great homes. Not all of them will be perfect for everybody. There's more of a limited audience for a lot of the houses that are languishing on the market.
That'd be a curious stat, and I don't know, maybe Sotheby's, I know you guys have a big statistics department, but not just inventory count, but like a quality inventory count.
Yeah.
Where don't you guys value houses by the metric? You discount a house if it's on a super busy road, or you discount a house if it needs a lot of work, or you discount a house if it's, I don't know, got easements or tax liens or whatever on it, right?
Yeah, yeah.
So there's got to be some sort of metric that you could build, or Sotheby's stats could build, that says, yeah, we have 1,100 houses, but there's actually only 50 or 60 quality, which would be a home with no more than I don't know, 2 major discount factors.
Right.
Right.
Yeah. I don't know. I mean,
Let's do that.
I like the idea. It's a little subjective, but I do like the idea because, like, my perfect dream home is probably different than somebody else's. I mean, I didn't even have an operating toilet when I bought my house, so I could remodel it completely and make it my own. But no, I like this. I've been hearing this from a lot of brokers, so it would be interesting to see how people were breaking down the current inventory and whether or not they thought it was quality.
Yeah.
So there's definitely things languishing on the market. I've been seeing things like 120 days on the market. Some homes that, like we were joking, that are like looking out over I-5, which, it's white noise, my friends. It's white
urban
noise.
river. Urban river.
Yeah, exactly. Yeah. But there was also some good news this week.
There was good news.
Really big news, actually.
So so supply and demand, anything that can affect one of those curves is going to ultimately affect prices as things play out. And the FHFA came out and they announced, let's see if I can pull that slide up here. Yeah, I don't even know if you can see it.
That actually looks pretty good back there.
They announced that they're raising their high conforming loan limit 8.9% to 726,525. So conforming means that's a loan backed by Fannie Mae or Freddie Mac. Those loans generally have softer underwriting guidelines, a little bit easier criteria to get a Fannie Mae or Freddie Mac loan than would be a jumbo loan, which would be a loan size over that amount.
Mm-hmm.
So in 2018, our loan limit was 667, and now we're at 726,525. So there's a lot of people that maybe for one reason or another couldn't go with the jumbo loan, but they could have gone higher had the conforming loan limits been higher. And now with the conforming loan limits being higher, it pushes a large group, or opens the door for a lot of potential home buyers to afford more than they were previously going to be able to afford in 2018.
What makes that different from the jumbo loan?
Oh, conforming. So there's a few maybe notable underwriting guidelines. Normally a jumbo loan, the minimum credit score is going to be around 700 versus Fannie Mae or Freddie Mac at 620. Mm-hmm. With the jumbo loan, you're going to have a reserve requirement, which is that's liquid funds required in your bank account after you close. Mm-hmm. And oftentimes those can be between 6 and 12 months of liquid reserves, which if it's a jumbo loan and your monthly housing payment is $6,000 or $7,000, well, that's another $70,000.
So just so that you can pay the mortgage, basically.
If it's a worst case scenario, if you lose your job, we want to see that you have enough assets to pay the mortgage for the next 12 months.
Gotcha.
And a lot of people, if you're putting 20% down on a $800,000 home, it's $160,000. You don't have another $70,000 or $80,000
right
for reserve requirements.
You don't? Not many.
Maybe
people
you do.
Not many people do. Not many people do.
Debt to income ratios are 50% with Fannie Mae and Freddie Mac. They're 38 or 43% with the jumbo loan. There's trade line requirements with the jumbo loan. You have to have 2 credit cards and 1 installment loan type. And you have to have had them for 2 years with no late payments ever.
How about mortgage insurance? Because people ask me about that a lot. And I'm not the numbers person. I always rely on Kyle to answer those questions. So I know that it has a pretty negative connotation. So
yeah, I mean, mortgage insurance is, to be clear, mortgage insurance is required on loans with less than 20% down, which, by the way, Fannie and Freddie only require 5% down. Most jumbos are minimum 10%, but your interest rate's going to be really high, so you want to do 20%. Mm-hmm. But mortgage insurance, what mortgage insurance does is it insures the lender that if you default on your loan and they have to foreclose and sell it at auction, it covers the lender for any losses. So mortgage insurance it's only a benefit to the buyer in that it promotes lenders actually lending money with less than 20% down. Mm-hmm. Other than that, the buyer gets no benefit to having mortgage insurance. Okay. But with that said, mortgage insurance is oftentimes a factor of maybe 0.4 or 0.5% of the overall loan amount, which, if we're increasing it year over year 8%, in a month and a half, your house is appreciated enough to where it covers all the money that you're sinking into mortgage insurance, and now you have another 10 and a half months that you get to net out on the appreciation. Does that make sense?
Yeah, that's a really good point to make too, because I think people are they get scared when they hear mortgage insurance.
Yeah, well, I mean, it definitely is money out the door. Like
Sure.
you're not getting it back, but it does enable you to buy a house maybe this year with less money down versus next year with more money down.
Mm-hmm.
And so you get to pay the mortgage insurance and capture this year's appreciation.
Right.
Yeah.
Okay, well, thanks for answering that question.
Yeah.
Does anyone have any questions? If you do, you can just type them in and we'll be able to see them. We were chatting about doing this for maybe 20 minutes or so. I don't know. I think we're already close to that amount of time. But I have been getting a lot of questions like about from sellers mostly that have been waiting to put their homes on the market and about timing and pricing. So
Yeah.
it's and those are really kind of key things to think about right now. And so I just wanted to say that it's really, really important to have your broker, your realtor, however you want to say it, have someone really familiar with your local market, have someone that will really study the stats for you to determine what your house should be priced at. Because you can't really play the game that we used to play, and many realtors did, by pricing sort of low to encourage people to drive the price up.
Yeah,
Can't do
to
that
bring on the bidding wars.
Yes,
Yeah.
you certainly wouldn't want to play that game and guarantee yourself, you couldn't guarantee yourself a bidding war right now because there's robust inventory. So timing is essential, pricing is essential. So it's lots of conversations to be had about that. Anyway, that's what I'm hearing most from people. So.
Yeah, for sure. And then I guess one last point that I want to ask you about is just how have things changed for people who are buying, they want to buy a move-up house now, right?
Mm-hmm.
Prices are a little bit lower. It's a great window to buy that move-up house. But the logistics of selling your current house and buying a new one are with higher inventory and softer market. Are you seeing more contingencies? Are people able to now write offers with contingencies so that they're not trying to juggle selling and buying at the exact same day?
That's also a question I probably get probably more than any other question is people that need to move up or move down in their homes and how do they manage those two transactions. It's a really daunting process for a lot of people because there's a lot of decisions to be made, but the short answer to your question is that yes, I've probably written more contingent offers over these past 2 years than I have in my whole career in real estate. So it is more common, and I think that if all the realtors in the transaction are really in good communication, if the escrow companies are in good communication with each other, even with an out-of-state move, it can be smooth and pain-free, as stress-free as possible. But yeah, I mean, there's various types of contingencies as well. I've had people find their dream home before they even listed their current home. But it's possible. It's possible to make those things happen. But if you do write an offer and find your dream home before you've listed your current home, you have to list your home in 5 days. And that's a little bit of a scramble.
You better get going.
Yeah, or you better figure out a way to buy that home without selling your current home. So I could go on about that for a really long time because there's lots of different ways to negotiate those two transactions.
Well, maybe we talk about that next week.
Yeah, I'd be happy to. Yeah, that's one of my favorite topics to talk about.
Yeah, it's definitely something that I get asked a lot, and I'm just like, I can tell you the financing side. I don't really know the logistics
But the financing side is huge, really.
Of lining it. Yeah, I could say you need to sell your current house before you can buy the next house, or you can afford both mortgages, so go ahead and buy the next house.
Mm-hmm.
But as far as the logistics of how to make that sell then buy structure work, that I leave that to Robin.
And I'm happy to help with it because it does happen a lot. I mean, it's hard, and people are afraid that they'll be without a home for a period of time, but there's lots of ways to make it work. And there's also rent backs. If you wanted to sell your current home, you can get a rent back from the new buyer. If they have conventional financing, the lender won't allow more than a 60-day rent back, which really gives you, with escrow, about 90 days to find your next home. I have never not found someone's home within that 90 days. I'm gonna knock on wood, but I've never not met that deadline for people.
It's pretty good. Yeah.
But I mean, that's because you're out there, you're motivated at that point also to find the next place.
Yes.
But a lot of people feel that they were too quick to buy their first or on their second home. So it's kind of nice to be able to buy it before you sell your primary residence.
Yeah, and that's for sure what we look at first when I'm pre-approving someone who's trying to look at buying up is, well, can we do both mortgages? Because that makes everything really easy.
Yeah, and then you can like really stage your current home and get it really dialed in to be perfect on the market. And that's, you know, another thing about the quality inventory. But if you can stand out in a market with robust inventory, then you should be able to sell your home pretty quickly with the right marketing and the right techniques and so forth. But
cool.
I feel like we've gone dark a little bit, but
oh yeah, maybe we have to get closer.
I don't say if we're yellow or not, but well.
All right.
Yeah.
Well, thank you guys
Thanks.
for joining us, and I guess maybe we'll wait. Anyone have any last questions? Otherwise, we'll see you guys next week. But we'll be here for 30 seconds if you have any questions.
Okay, that's good.
Yeah.
And you can also personal message us those questions, or I think once we have this uploaded, and you can and Kyle can share it too. You can ask questions in the comments.
Truth, and we do monitor those.
We do,
and we can get back to you.
We try to get back to people pretty quickly.
Yes.
Yeah. Okay. Oh. You're welcome. Now we can see some.
Yeah.
Some
very cool.
So I appreciate that.
All right. Well, have a great weekend, and we'll see you next week.
Okay. Thanks.
All right.
Bye.
See ya.